Welcome back to the Trading Desk. We were talking in the previous section about the relationship between the dollar and interest rates, and we're going to continue that discussion here today, talking a little bit about oil, which is also, and again, I think that one of the themes in this section is talking about the inner market dynamics between different vehicles.
Sure.
Oil obviously is a big one to go along with the dollar. So let's touch on that a little bit, guys. I mean, oil has now come off over $40 a barrel, went to
in
almost
in
dollar terms,
right.
As the dollar has exploded.
Right.
You've got oil coming back down to earth, but I don't think it's by any means going back to $20 a barrel.
I think the one thing we should really maybe touch upon first, just to go back to that whole sentiment issue. Last show we did, we were talking about oil at the time it was around 145.
Yeah. It was at the
It was
high.
the same thing. Yeah. Magazine covers. Everybody was freaking out about
mom and pops were getting long oil.
Yeah, everybody was getting long oil. You bought a Suburban. That couldn't have called the top in oil better. But anyway, go ahead, Jesse. I just think it's important to point that
absolutely.
out.
I think in oil's another trade like the dollar, where you kind of expect, okay, the dollar's just too cheap. It's oversold. Too much negative sentiment. It's going to bounce. Once you get that bounce, or once you get the top in oil, oil's come down 30-some%. I mean, it's gotten hammered.
Right.
It's like, where does it go from here?
Right.
I don't know, to be honest with you.
You're in that purgatory zone again. I mean,
right.
It's
and the point is, I think when there aren't any of those high probability trades, it's fine to just stay in cash. Watch it.
As far as that vehicle, absolutely.
I think there is one interesting correlation between natural gas and oil. And right now, when you look at the ratio of those prices, either oil is extremely overvalued compared to natural gas, or natural gas is extremely undervalued compared to oil. Sure. So I think you could probably go short oil and buy natural gas on a pairs trade, which we've explained before. Right. Check out thetradingdesk.net for a recap on that explanation.
but I think you can. You're right. You could buy,
that.
and simply you could buy ETFs. You could buy the UNG, which mirrors natural gas to a T. Matter of fact, I was getting long that last week, and I think you can still buy that and get short USO.
Even though we're not talking about it here, there's a similar relationship with gold and silver.
Right.
Gold is probably very overvalued relative to silver, so that same pairs trading analogies applies there as well.
Right.
But so go ahead. Anyways.
No, go ahead.
There's those type of relationships, though, that make for a great indicator. I mean, right now, oil's come off so much that I wouldn't bet that it's going to keep going down at this point. But if you want to bet that its relationship to natural gas is going to change, that's I think a high probability.
Well, if anything, I mean, right now, when you're in this zone where we're really not going to go too much higher or lower, is what I would say. I mean, you're really in an area where you can start selling some spreads. You can sell puts below the market and sell calls above the market, and probably you're going to stay in this area of going nowhere.
Probably are, because what's going to happen
that's the way I kind of look at things like this. There are ways to pull out. There are trades, but it's a non-directional trade.
Another distinction to make is
that
oil might be still overvalued, but there are oil stocks out there that might be cheap and be great buys. I haven't found any myself, but it doesn't. I mean, those markets don't trade exactly kind of in sync with each other.
But knowing where you are in a market again is a common theme. And when you get into these areas, how do you trade? If you're in a trending market, it's pretty easy. You buy a dip, and whether it's up or down. If it's going down, you sell the rallies. And those things now are not really long-term broken, so it's not really in a downtrend. But it's not, the uptrend's not so hot anymore.
Right.
So again, you can play that kind of that accordion, that inhale exhale that's going to go on through these types of opportunities.
Sure. And a lot of what accounts for some of that price action too is that all the people that bought it at 130, 140, 145, they're selling into rallies now just to say, get me the heck out.
They just want to get back to even.
Therefore, very limited upside on these long trades.
Absolutely. So. When we come back, we're going to talk about another market that we do believe is kind of in the same purgatory, and that is the housing market.